Hey there, podcast enthusiasts. Are you tapping into the potential of podcasting to boost your brand? Here's something remarkable. 67% of the U.S. population tunes into podcasts. That's not just listeners, it's a community. And let me tell you, the emotional bond between listeners and their favorite podcasts is stronger than ever. Don't just take our word for it. Visit catsdigital.com to explore success stories from advertisers who trust podcasting to deliver results. Discover more at katzdigital.com.
A quick heads up before we get started, there is some swearing in today's episode. Okay, here's the show. Last Sunday night, around 8 p.m., a guy named Keith Gill logged onto Twitter, or X, whatever, and posted for the first time in 3 years.
It was only a picture, drawing really, of a man sitting forward in a swivel chair, holding what looks like a video game controller.
That's Alex Kirshner, a contributing writer here at Slate. And this image, it unlocked a certain kind of mania. What happened next?
What happened next is that in weekend after hours stock trading, the stock for Gamestop and also for AMC went up a lot, to the moon, as some have started calling it over the last 3-4 years.
Because Gill was a ringleader of 2021's meme stock craze, and his reemergence, like some kind of internet groundhog, kicked off a minor frenzy.
You can't get away from one of the biggest trending trades right now. The meme stock craze is back.
GameStop shares are soaring once again this morning, adding more than 170% just since yesterday morning. Another meme stock soaring along with GameStop is AMC. AMC is up 187% for the week to date. And of course, it's only Tuesday.
Even though stocks dropped later in the week, it all felt a bit like we'd seen this show before. The one about a gang of day traders on Reddit who made themselves into a market-moving force. It became an actual movie.
Babe, how much did we make today?
$5 million.
How much did we lose today?
$1 billion.
And yesterday?
$4 million.
And yesterday?
$1 billion.
But Alex says what we saw this week is not a simple rerun of 2021.
I don't know if you could call it a rerun, because I'm not sure that what happened in 2021 ever really stopped.
Sure, trading quieted down, meme stock prices slid, but the idea of meme stocks never vanished.
And, at moments when GameStop receded from the public spotlight, there have virtually always been, since then, other stocks that have taken the lead in the meme stock sector, if you will, which I think you can now think about like the tech sector or the telecom sector or the oil sector, whatever you might say.
Yep, you heard him, the meme stock sector. Today on the show, how the meme stock grew up. I'm Lizzie O'Leary, and you're listening to What Next TBD, a show about technology, power, and how the future will be determined. Stick around. Reboot your credit card with Apple Card, the only credit card designed for iPhone. It gives you up to 3% daily cash back on every purchase. Plus, Apple Card has no fees, not even hidden ones. Apply for Apple Card now in the Wallet app on iPhone. Apple Card issued by Goldman Sachs Bank USA, Salt Lake City branch. Subject to credit approval. Variable APRs for Apple Card range from 19.24% to 29.49% based on creditworthiness. Rates as of February 1st, 2024. Terms and more at applecard.com. Warmer, sunnier days are calling. Fuel up for them with Factor's no prep, no mess meals. Meet your wellness goals in time for summer thanks to the menu of chef-crafted meals with options like Calorie Smart, Protein Plus, and Keto. Factor's fresh, never-frozen meals are dietitian approved and ready to eat in just 2 minutes. So no matter how busy you are, you'll always have time to enjoy nutritious, great-tasting meals. Keep kitchen time to a minimum. Factor meals are ready in 2 minutes. No shopping, prepping, cooking, or cleaning up. Choose from 6 menu preferences to help you manage calories, maximize protein intake, avoid meat, or simply eat well balanced. Head to factormeals.com/whatnexttbd50 and use code whatnexttbd50 to get 50% off your first box plus 20% off your next month. That's code whatnexttbd50 at factormeals.com/whatnexttbd50 to get 50% off your first box plus 20% off your next month while your subscription is active. Let's rewind to late December of 2020. Many people were at home because of the pandemic. Congress had authorized a series of stimulus payments to help cushion that blow. And on the internet, specifically the subreddit Wall Street Bets, day traders were trying to figure out what to do with that money. Enter Keith Gill.
Hey, what's up, everybody? Cheers! Happy Friday, happy holidays. I hope everyone's having a great week. Surprise!
On YouTube and Twitter, Gill goes by Roaring Kitty. On Wall Street Bets, his handle is Deep Fucking Value. And back in December of 2020, he was an agent for Mass Mutual who liked to day trade on the side.
You know, he started doing this on his own time. In fact, he's done it on his own time forever. I don't think it was popular at all with his now former employer that he was doing this kind of thing on the side. And he didn't train all his life to become a popular financial advice giver on YouTube and Reddit. And it just sort of happened.
It happened mostly through posting on Wall Street Bets.
And one of the most compelling arguments that was made in this forum at that time was that GameStop, the somewhat flailing brick and mortar video game retailer, was primed to see a significant increase in its stock price. And that additionally, if a bunch of retail investors would buy up the stock and just buy and send the price upwards, that would eventually cause institutional investors who had bet against the stock, who were short the stock. Basically, you borrow the stock at a certain price, you hope it goes down, you buy it when it's down, and you pocket the difference between what you paid for it and what you sell it for, hoping that they would have to bail out of their positions, which ultimately one hedge fund very famously did. All of this took on at the same time sort of a revolutionary feel, I think, for the retail investors who were involved in it, because it was a chance to stick it to a really rich guy, Gabe Plotkin, who ran a hedge fund that made a lot of money until this, and it was driven basically into the ground by this episode. And so I think what happened was that some people, led by Keith Gill, who was making this case most proudly both on Reddit and on YouTube streams, just really liked the stock. And some people got on because the crowd was doing it, and some people got on because it was a chance to ostensibly stick it to Wall Street, even though I think it's worth noting that some of the rich guys definitely rode this wave as well. And it's not a completely clean story of the rich.
This is not a total David Goliath.
No, it's not every rich guy losing his shirt on this transaction. But that's what happened, was that a somewhat guerrilla internet force saw an opportunity to buy up the price of this stock, to force short sellers to bail out of it, and in so doing, sell the stock and send it up even further. And it kind of worked, at least if you got out at the right time.
We did a story on it at the time, and I think the narrative was probably this band of weirdos on Reddit is taking on Wall Street, but also there are people stuck at home, they have extra money, they have nothing to do with it. We talked to this one guy, we agreed to call him Jason, and that's basically what he said.
It's fun, and I've been locked in my house for a year. I think millennials at this point are dads with jobs who have been locked in their house for a year. We're still the same people. We got through 2008, and we're just trying to stay entertained, and we can't all find PlayStation 5s. So this is another good substitute.
So clearly he was having fun, but also there was this whole kind of pandemic restriction layer to it. And one of the questions I wanted to ask you is, as those restrictions eased and some people went back to their offices, do you think those Wall Street Bets Redditors turned their attention elsewhere, or were they just still hanging on and waiting?
I think that the boom that came from pandemic stock trading and pandemic sports betting and pandemic crypto prices and pandemic speculation in any way that you can hasn't entirely abated. I think the evidence of that is in the status of the stock market, which the day that we recorded this hit an all-time high in the S&P 500. I think that it's intuitive when you look at the ways in which stock trading has changed. Robinhood, which is the app that seems to have been preferred by a lot of the meme stock and crypto and options traders, sort of opened up a new world, for better and for worse, into zero commission trading, where it's now really, really easy for any of us, and I have done this myself, to go on a non-Robinhood brokerage like an E-Trade or a Fidelity or what have you, and buy index funds for no commission whatsoever. And the ease of use of investing hasn't changed. The economy has been, well, air quotes, the economy has been reasonably strong, even though it's not always expressed that way. When people are asked, how's the country doing? How do you think the president's doing, et cetera?
Right. This is the sort of the stock market and the economy are not the same thing.
But in terms of, the job market and the equities market and the relatively slower inflation, though now I'm getting out of my own wheelhouse here quite a bit, like things have been good and people have had disposable income to pour into speculative tools, whether they be less speculative tools like, traditional equities or more speculative tools like crypto or like GameStop or like Donald J. Trump technology, Trump media and technology. It just doesn't seem like that stopped. And I think the evidence of that is in how many different equities over the past few years have gone way, way, way up for no discernible reason. Because at any given time, it's always something. I mean, it's not as if the crew of retail traders that sort of gathers, not just on Reddit, but in different places all around the internet, has stopped paying attention to markets. There's no evidence of that, because I don't think that it's all investment banks and hedge funds who are making AMC's stock go really high or GameStop stock go really high or the Trump media company going really high or even Bed Bath & Beyond hanging on for a while before it went bankrupt. Those aren't things that traditional institutional investors really tend to do. They don't buy a bunch of stock in companies that are about to go bankrupt with the complete knowledge that that stock is going to be worthless weeks later.
Which all brings me to this week. Why do you think Keith Gill still commands this type of attention? Because it was after his tweet, his post on X, and subsequent, he did one while I was walking into the studio, that sort of unleashed the flood of meme stock bonanza again.
I think there's a parasocial element to this that is the same as you might feel with your favorite podcast host or your favorite talk show host or your favorite professional athlete. And for a certain type of person who follows this news really closely and is, a believer in the power and kind of the wisdom of the crowd and the power of internet communities, and maybe who made a bit of money back in 2021, Keith Gill commands that kind of attention. And he has been off of social media for a few years, but it's not like people forgot who he was. 3 years wasn't that long a time ago. Paul Dano has played him in a movie since then. And he commands enough of a crowd that some momentum can coalesce around him. He tweets a picture, tweets a couple of videos. Everyone can see the stock goes up. Then you get momentum traders involved who just see that the stock's going up. Maybe I'll buy too. And I think the rules of markets have changed a little bit the past few years, but the one thing that doesn't change is that when people buy a stock, the price goes up. And that has held true.
In a piece that you wrote for Slate, you made the case that this isn't the weird, random, funny thing that somebody on CNBC might think it is. What makes you say that? What makes you say that meme stocks are just like a piece of market furniture at this point?
What makes me confident that the phenomenon will never go away is that it's gotten so easy to do this It's gotten so cheap to invest in these stocks without paying commissions and to do it in seconds. And it's gotten so easy to talk through ideas with so many people so quickly on the internet, whether you're doing that on a subreddit or a group text or a Discord server or your Instagram or your TikTok or whatever, that I don't know why the genie would go back in the bottle. And what we've seen since 2021 is that you really don't even need a big bad villain in the story anymore to make it into this David versus Goliath thing. Like the first time around for GameStop gets picked in part by the crowd because there's a hedge fund that is very publicly betting against it.
Right. You had these guys with a big short position. It was fun to demonize them.
Exactly. And there has been still some significant short interest in GameStop recently, but it's nothing close at all to what it was in 2021. And yet you still just get the opportunity for people to jump on a bandwagon that starts when Keith Gill sends some tweets. And you see the same thing play out without this Robinhood element to it, or I guess I shouldn't say Robinhood because that's the app, but without this revolutionary taking from the rich to give to the poor element of it, because so many different types of stocks have had this happen over the past few years. Trump's social media company is a useless pile of shit from any like reasonable financial perspective. And yet Donald Trump's personal net worth has gone up by billions of dollars because fans like him and they want to buy the stock. People were buying the stock of Bed Bath & Beyond when Bed Bath & Beyond was saying very clearly and very publicly, we are probably going bankrupt really soon. What makes me confident that this is just market furniture now is that people have been pretty clear for a few years in a bunch of different categories that they don't need a particular reason to do this. You know, you get behind a cause, and that cause is buying stock of this thing for some reason, and you do it.
When we come back, how companies now try to appeal to the meme stock internet. Reboot your credit card with Apple Card, the only credit card designed for iPhone. It gives you up to 3% daily cash back on every purchase. Plus, Apple Card has no fees, not even hidden ones. Apply for Apple Card now in the Wallet app on iPhone. Apple Card issued by Goldman Sachs Bank USA, Salt Lake City branch. Subject to credit approval. Variable APRs for Apple Card range from 19.24% to 29.49% based on creditworthiness. Rates as of February 1st, 2024. Terms and more at applecard.com. If we really want to get old-fashioned for a second, I want you to think about what a stock used to mean. It was a tiny sliver of a company, and buying some and holding on to it meant you thought that company would perform well over the long haul. Obviously, investing is a lot more complicated than that. But the idea that a stock is a proxy for your faith in a company feels divorced from reality in meme stock world. Like we're talking about a completely separate entity.
I don't think that it's like anyone buys a share of GameStop because they're really expecting a sliver of the future profits of that company to go to them. I think that for most people, this is still a curiosity, not something that they think about at the kitchen table when they're planning their financial future. They're assessing whether or not this is a good month to put more of their money into the stock market.
Right. Nobody's like, you know what I really want to do with my 401k? GameStop.
And even more so, I think that there might be some people who are doing that, but I think that someone who just generically puts money into the stock market doesn't see that GameStop was up 80% the other day and say, wow, market's doing great. Let me go and buy an index fund right now because this is clearly a sign of something. I would hope not. I wouldn't think so, right? That makes, I would say, even less sense, like way less sense on a way different level than a general speculative meme stock bet where, you know, you think the crowd is going to bet something up for a period of time. I don't think that many people believe that views of the entire stock market are shaped by how these stocks are doing.
But companies do seem to be shaping their behavior based on what? The desire to become a meme stock? To court the internet?
The one that has most famously tried the hardest, I think, is AMC, the movie theater chain. And they've done this in different ways. I think it's important to note that they sort of got picked naturally at first, which was a key leg up. But then after that, and this was over the course of 2021, 2022, and some of it continues to this day, they did things that were pretty clearly designed to play to nostalgia, to make people think, oh, these guys are funky and cool. The CEO of the company did a YouTube interview in his underwear where he was, got up and you could clearly see that he was wearing boxers. That was definitely playing to a certain crowd. The company bought a gold mine. You're probably familiar with diamond hands being the descriptor for someone who's got like the magic touch in the market and is going to buy something that's going to go up. You got diamond hands
on Wall Street Bets.
AMC started offering specific in-theater perks for retail investors. Like if you invest in the company, you get popcorn or something like that when you go to the theater. So that's all pretty smart. Like, and AMC has also been up this week and has also had repeated big spikes in its stock price and has in some cases been able to take advantage of that, as has GameStop, because when the stock price is really high, and AMC actually did this just recently, they didn't time it perfectly because you can't time it perfectly. AMC sold more stock.
Right, to go raise some cash.
Yeah, to support the operations of this theater chain. And that's really smart. But I think, Lizzie, that the proof that you can't exactly tell when you're going to really get meme stocked, even though AMC is a consistent member of the sector, is that AMC launched this offering weeks ago and just caught like the very last sliver of it while this price was being bid up by the internet. If they'd have known when it was going to happen, and if you could predict this the way that you could predict an earnings call for a more serious, substantial company, then they would have done that and they would have made a lot more money. So even the companies that have had a rare handle on how to be popular in the retail investing meme stock world only have so much of a handle on it because they don't know when Keith Gill is going to tweet any more than you or I do.
So if the admittedly simplistic narrative of 2021 was retail investors sticking it to the hedge funds with this fun meme stock thing, what is this about? Internet investors flexing all the different muscles of the internet where you can join together and trade cheaply and create your own boom?
I think what it's about is how little it takes now. It took a lot in 2021. I mean, this didn't all just happen over a couple of days in January. There was Keith Gill as sort of a ringleader who was making this case most persuasively, but there were also dozens, hundreds, thousands of other people kind of bubbling up in conversation about GameStop stock for weeks. And lots of things had to happen, some of them in a fairly traditional market-moving sense that led to that boom that we all remember and that they made a movie about. What happened this week is that some dude tweeted a picture. Takes a lot less now than it did 3 or 4 years ago because the foundation has been laid.
Alex Kirshner, thank you so much.
Great to be here.
Alex Kirshner is a contributing writer here at Slate. He also co-hosts the Split Zone Duo podcast. And that is it for our show today. What Next TBD is produced by Evan Campbell, Patrick Fort, Anna Phillips, and Shayna Roth. Our show is edited by Paige Osborne. Alicia Montgomery is vice president of audio for Slate, and TBD is part of the larger What Next family. And if you like what you listened to today, I have a request for you. Join Slate Plus. Just head on over to slate.com/whatnextplus to sign up. It is the best way to support our work. All right, we'll be back on Sunday with another episode. I'm Lizzie O'Leary. Thanks for listening.